Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Mark Podolsky was armed with only $3,000, a gut-wrenching fear, and absolutely no real estate experience until he bought his first few parcels of raw land in 2001. Today, Mark is the author of Dirt Rich, the ultimate guide to helping you build a passive income, and owner of Frontier Properties, a very reputable and successful land investing company, and has been buying and selling land full-time since that transaction in 2001. By focusing on working smart, not hard, he has completed over 5,500 land deals with an average ROI of over 300% on cash flips and over 1,000% on the deals he sells with financing terms. Mark, welcome to the show.
Sam Wilson, thanks so much for having me.
The pleasure's mine. Man, this is a fun topic. You know, it's not the blue ocean I think everybody might think it is, but it's certainly one that's really not that well understood, and especially not in the commercial environment, at least not, for the guests that we have come on this show. Can you briefly tell us, though, before we dig into the nuances of land investing, briefly, where did you start? Where are you now? How did you get there?
Yeah. So let's rewind the tape to 2000. Okay. And I had a 45-minute commute to work and back. I was a miserable, micromanaged investment banker, specializing in private equity groups with mergers and acquisitions. And Sam, it got so bad for me. I wouldn't get the Sunday blues, anticipating Monday coming around. I'd get the Friday blues, anticipating the weekend going by real fast and having to be back at work on Monday. So my firm hires this guy. He's telling me that as a side hustle, he's flipping raw land, pennies on the dollar, and he's making a 300% return on his investment. I'm like, looking at companies all day long. I'm like, a great company, great, has 15% EBITDA margins or free cash flow, right. Average is 10%. And I'm looking at companies all day long, less than 10%. So I don't believe him. So I got $3,000 saved up for car repairs. I go to New Mexico with him. I do exactly what he tells me to do. I buy up 10 half-acre parcels, an average price of $300 each. I flip them online. They all sell for an average price of $1,200 each. It worked. So I took all that money, went to another auction in Arizona, which is where I live. And again, it's 2000. There's no one in the room. I'm buying up lots and acreage for nothing. And over the next 6 months, I sold all that land. I made over $90,000 cash. So I go to my wife, who's pregnant. I say, honey, I'm going to quit my job and become a full-time land investor. And she said, absolutely not. So I said, okay. So it took about 18 months for the land investing income to exceed the investment banking income. And then I quit, and I've been doing it full-time ever since. I love it.
That's fantastic. I mean, so many questions that go into that. What's it look like today? How have things changed since 2000? Walk us through a typical deal. Why are people selling? I mean, I could ask questions all day long. So now I've thrown.
Well, I'm gonna walk you through the model.
Yeah.
But essentially, when I started, I was dumb. Right? I thought I was playing entrepreneur. What I'd built for myself was just a better job.
Right.
And then I got a mentor, and he's like, "Don't call yourself an entrepreneur." He's like, "You're insulting me." And I'm like, "What are you talking about?" He's like, "Well, if you die tomorrow, what happens to your quote unquote land business?" I'm like, "Oh." He's like, "This thing needs to be able to run without you." So then step by step, I started learning about delegating, automating, software, and got myself out. But I'm going to walk you through the model, and you'll kind of see how I've got this 90% automated with, software and inexpensive virtual assistants. So Sam, where do you live?
Memphis, Tennessee.
Memphis, Tennessee. Okay, great. I'm going to assume that you own 10 acres of raw land in Texas, and you owe $200 in back taxes. So Sam, you're basically advertising two important things to me. Number one, you have no emotional attachment to that raw land. You're in Memphis, properties in Texas. And number two, you're distressed financially in some weird way, right? Because you're not paying your property taxes, and we don't pay for things. We don't value them in the same way. As a result, the county treasurer keeps sending you notices saying, Sam, don't pay your taxes. You're going to lose that property to a tax lien or a tax deed investor. So all I'm going to do is look at the comparable sales on your 10-acre parcel. I'm going to take the lowest comparable sale. And I'm going to divide by 4. And that's going to give me what Warren Buffett would call a 300% margin of safety. So let's say the lowest comp is 10 grand on your parcel. I'm going to send you an offer of $2,500 for your 10 acres. Now you accept it because for you, $2,500 is better than nothing. In reality, 3 to 5% of people accept my quote unquote top dollar offer, right? So now that you've accepted it, I've got to go through due diligence or in-depth research. I have to confirm you still own the property. I have to confirm back taxes are only $200. I have to make sure there's been no breaks in the chain of title. I have to make sure there's no liens or encumbrances. I want to know the GPS coordinates. I want to know everything a buyer is going to want to know. I want to get the aerial maps, the plat maps, the GIS maps. What are the neighbors doing? What are the roads like? This whole checklist. And I'll invest $11 in due diligence with my team in the Philippines. They're connected to an American title company because it's 5,000 or less. Now, if it's 5,000 or more, I'll actually close through a title company. But in this scenario, it's $2,500. I'll take a little bit of risk. Everything checks out. And now I buy the property from you for $2,500. But now I'm going to sell this property 30 days or less. And I'm going to make it cash flow like a rental home. So Sam, I've got a built-in best buyer. Do you know who it is?
No.
The neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity. Expand your privacy, expand your views, protect your views, know your neighbor. So oftentimes the neighbors will buy. Now, if they pass, I'll go to my buyers list. My buyers list passes. I'll go to a little website you may have never heard of called Craigslist. It's the 10th most trafficked website in the United States. I go to a smaller one. I know you've probably heard of this one called Facebook, buy sell groups in the marketplace. And then I go to the lands, landmodo.com, landandfarm.com, landsofamerica.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land. But the magic in the way that I can sell this in 30 days or less is I'm going to make it irresistible to that next buyer. Because all I'm going to ask for, if you want to control this 10-acre parcel that Sam Wilson used to own, the famous Sam Wilson, all you have to do is put a $2,500 down payment, make a monthly payment of $249 a month at 9% interest over the next 84 months. So it's a one-time sale. Like I'm going to get my money out on the down, or I might go 6 to 10 months out. And then I'm making a car payment. Let's say $249 a month, 9% interest for the next 84 months, no renters, no rehabs, no renovations, no rodents. And because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act. So the game we play is, can we create enough of these land notes where our passive income now exceeds our fixed expenses, and we're working because we want to, not because we have to.
Yeah, I think that's certainly compelling. I mean, I love that. How do you end up not buying just a dog piece of property that no one wants?
I've done this now over 6,000 times, and I've never been stuck with a piece of property. So what you call a dog piece of property, someone is going to call an amazing prepper parcel, right? These are people that are preparing for the worst, hoping for the best. So there is literally a pig for every barn. I've bought land that looks like Chernobyl. It all sells if it's priced right.
That's crazy. Yeah. I mean, I can think of places, you mentioned the word or the state of Texas, and obviously there's a lot of value in Texas, especially in the commercial real estate space. But last year I ended up driving through the northwest corner of Texas, and I just thought, my gosh, I'm not sure what road we were on, but I go, ooh, what is this place? Like, this looks like the moon, and I can't imagine anybody would want to buy this land if it were free, but you're telling me I'm wrong.
They want it. They want it.
That's crazy. I love that. So that's how the deal works. That's how you've given us the playbook for how you dispose of the land, how you market the land. One thing we hadn't talked about is, how do you find it?
Okay, so Sam, let's be honest, right? Nobody wakes up and thinks to themselves, boy, I'd like some raw land in Iowa today, unless you live in Iowa.
Sure.
Right. So we were going to focus on California, Nevada, Washington, Oregon, Arizona, Nevada, Colorado, New Mexico, Texas, Florida, Southwest, a little bit Northwest, California, and Florida. These are the sunshine states. These are fast growing states. And these states have a ton of inexpensive raw land. So the best place to start is, well, let's say that I moved to Memphis, right? And you're the best investor I know. Well, I'm just going to follow where you buy. So I'm just going to go look for where other land investors are buying, because I know definitively there's a market there.
Gotcha.
So that's where we start.
How do you find out, where other investors are buying?
So we're going to go back to those land sites. So we'll start landmodo.com and we'll see, well, what counties are the other land investors marketing the properties in?
Interesting. That's fascinating. The business sounds too simple, Mark. I mean, I'll be honest with you, from an outsider's perspective that invests in self-storage and multifamily and some ground up development stuff, this sounds really, really oversimplified. Am I missing something?
I prefer boring. It's the most boring real estate model. It's really simple in that sense. And you're not going to go on HGTV or the DIY network and see flip this land. The before pictures raw land, the after pictures raw land. So, we just shuffle paper and make money. I'll give you that. It is simple in that sense, especially compared to, multi-million dollar multifamily deals. I do think it's a good gateway drug to start building up cash flow and wealth, and then go into multifamily. But it's not easy. There's a lot of moving parts, and the way that we look at it as a business. So to do volume, you're going to have a team in place. You're going to have to use software on the front end, software on the back end to do all this. Because the last thing you want to do is build yourself another job.
Yeah, because everything you've mentioned there in the post-purchase marketing steps, that's a great big giant time suck, right? Posting on land and farm, doing this, getting on Craigslist, going to Facebook. I could imagine you could spend 2 to 4 hours just monkeying around with getting all this stuff posted and the right information on each site. So how do you create that system such that that's what your business coach told you? Hey, Mark.
Right, exactly. So let's say that, I'm going to go ahead and post an ad on Facebook. Well, the first thing I'm going to do is record myself posting an ad. And I'm going to tell them why I'm posting this ad, why you're valuable. So you don't feel like you're a cog in the machine. This is our why, this is our mission, right? And this is why and how we're going to post an ad. And I'm going to record it. I might use Fleek.io. I might use Zoom. Loom. It doesn't really matter. But I'm going to record those steps. Then maybe I'll go to Fiverr.com and have a technical writer transcribe what I did and break it down. Then I'll go to a 10-year-old child and say, can you explain this process to me? And if they get it, it's a good process. If they don't, back to the drawing board, do it again, kind of thing. So you want to make it really, really simple, because the process is more valuable than the person, because the people are going to come and go. So then once I have my process, I'm going to hire 3 people. I'm going to test them. Go ahead, follow this process, post an ad on Facebook, and I'm going to give them a test. I'm going to make a mistake on my process, where I'm going to give them something impossible to do, right? An impossible task. Will they say it's impossible? Or will they think for themselves and be like, oh, I couldn't do what you asked, but I did this instead, and it solved the problem. That's the person I want to hire.
Right.
Yeah.
That's really fascinating. Does this work, in areas where, here, I'll pick a random city, Charlotte, North Carolina, right? It's growing like gangbusters. Is there still opportunity in places like that? Or does this have to go be more rural? Does it have to be,
Well, it needs to be rural, about 2 to 3 hours from the nearest city. Unless you're going to do infill lots. The problem is that, let's say I've got an infill lot in Charlotte, North Carolina. Right. Well, I'm not going to sell it to Sam Wilson for 25, 30 cents a dollar. I'm going to go to the biggest, baddest land broker in town and sell it 110 cents on the dollar.
Right.
So we want to find somebody who's distressed because we're making our money on the buy. So we'll actually avoid, San Francisco, New York, Manhattan, right? Charlotte. We want to go to areas that might be in the path of growth, but haven't gotten there yet.
Right. So it's out there a little bit. It's like you
It's
said,
out there.
it's more rural.
Right.
That's really fascinating. Is there a size limit that where this becomes harder to do, or is it really you can take down anything of any size as long as the numbers pencil?
As long as the numbers work, it doesn't really matter. I bought 640 acre parcels all the way to a postage stamp.
Interesting. That's and what about on the buy? Like, do you ever do seller financing? Can you get terms from sellers, or is it just that you're offering such
Well,
a
that's the
ridiculous-
great thing about this model is there's, the banks won't loan on it.
That's the great
So
thing about it.
yeah, because there's no liquidity. So we're providing the liquidity as when we sell the property to other people. But if we're buying it and so I don't use really debt, we buy it all cash. But let's say that you've got $1 million deal and the guy, it's worth 3 million and the guy can't sell the property and you don't have the $1 million. Well, you might be able to put 200,000 down and he has to carry the 800,000. Yeah, that could definitely happen.
Right, man.
Because there's no other way he's going to sell it.
Right. Yeah, that's really interesting. And then you're going to turn around and execute your same plan. I mean,
Exactly.
yeah, that's intriguing. How do you pick? I know you said you do the Sunshine States. You're doing more rural. What am I missing about this, Mark? I'm coming up short on questions, but I feel like there's so much here that I don't even know where to start on what to ask you about the business.
Well, if it's so great, Mark, why are you teaching other people how to do it?
Yeah, there you go.
Aren't you creating your own competition?
Yeah, aren't you? Well, I'm sure that I'll let you answer that. It's a softball, but I'll let you answer it.
Okay, give me a hardball question.
Well, no, I guess that's a genuine question. Let's hear it. What's the answer to it?
Okay, so because that's what my wife asked when I started teaching.
Okay.
She's like, "Why are you teaching this? You're going to create your own competition."
Right.
I said, "Okay, well, let's put on our investment banker hats." And what's the first thing an investment banker asks? How big is the market? So the market's massive. There's billions of acres of land available for sale. There's no big players. There's no hedge funds. There's no private equity groups. There's no big money in this place. So you got all these little cottage industries. So you, me, 1 million people could be in this niche. We're all going to run out of money before we run out of deal flow.
Right.
And then for me, it's so gratifying because I'm at a place where I don't get excited closing another land deal. But when somebody tells me, hey, I was able to quit my job today, my wife was able to quit her job, or my spouse was able to quit their job, I'm able to spend 75% more time with my children because I got into this model. You've changed my life. That's why I do it. And that's the most gratifying thing for me.
Right. What does success, I know that you said that's a gratifying thing for you, but what does success in your business and, what's the future growth plan for you? What does success look like and what's your future growth plan?
Well, success for me is just making the pie bigger and helping more and more people get out of what I call solo economic dependency, which means if they're personally not working, they're not making any money.
Right.
So, I don't help people just solve their money problems. I want to solve their money and their time problems. And, how do we shortcut it in life? How do we get that trifecta where we can then move up Maslow's hierarchy of needs into self-actualization? So there's so many people we probably know that they solve their money problems, but they're working 60, 70 hours a week. They're stressed out all the time, right? We know older people that have solved their money problems and their time problems, but they don't have their health and they can't go do the things they want to do anymore.
Right.
So how do we shortcut that? We have our health, resources, and time. And I think this model solves it.
Yeah, that's that is the trifecta. The ultimate trifecta is health, resources, and time that so few ever figure out. What do you do with your health, resources, and time now that maybe you didn't get to do before?
Well, I'm planning on traveling around the world once my daughter is in college, which will be in 18 months. So I'm working on that. And then, I wrote Dirt Rich. I'm working on Dirt Rich 2, the next plot. So I thought that was clever.
It is clever. I like that.
So I'm working on that as well. And then I've got software called geekpay.io that automates. It's a set and forget it system to collect the down payment and get on an automated basis the ACH or the checking account on those monthly payments. It does the notifications. They can self-serve, make prepayments. They can see their current balance. Again, my philosophy being I can always make more money. I can't get more time.
Right.
And building that up, helping other industries as well with GeekPay, and then just getting better and buying and selling raw land and getting better at teaching people the model.
Yeah.
So Kaizen.
That's brilliant. I love that. Here's a question for you. One that I generally ask, and I guess just, being kind of a little bit stymied by the simplicity or the boringness of your asset class. It kind of leaves without questions to ask, but what are some gotchas? Like, what are some things that people have to look out for where you could get burned in this business?
Yeah. So there's a thing called a super fund site. So if I'm going to go buy in Ohio or Pennsylvania or New Jersey, and I'm buying in a super fund site, I'm responsible for that cleanup. And that could be tens of millions of dollars. So before you buy, you go to epa.gov and you see where all the super fund sites are. That's the biggest gotcha. The second biggest gotcha, again, is not following the model. So don't overpay, right? Know your numbers, know the comps, divide by 4, and look at that response rate. If it's under 3%, the market's telling you, well, you came in too low. But if it's over 5% response rate, then you kind of came in too high. You have to retrade.
Right. Yeah. So are you sending out blind offers then?
No, they're actual offers.
Well, I know, but I'm saying like, okay, so let's say I'm assuming you're doing this via direct mail.
Via direct mail, right?
Right.
So I'm gonna use a software called LG Pass that's going to automate it. So once I get that list from the county, which is public information, I'm going to scrub that list by, let's say, use code VL for vacant land. Now I've got all the vacant land. I'm going to do one more scrub by APN number or assessor's parcel number. That'll get me by neighborhood. Because what I don't want to do is send somebody with 40 acres the same offer as somebody with 5 acres, because that 40-acre person is going to send me back glitter in the mail. So I want to price it correctly per property.
Right. And what do you mean by that? Like, how do you price a 40-acre parcel different than a 5-acre parcel?
Well, again, I'm going to look at the comps and make a pricing matrix for that area. And I'll look at the lowest comp and divide by 4. And when I say I'm going to do it, I'm going to train my virtual assistant to do it.
Right. And so when you send these direct mail pieces, it has a pre-built-in offer. Hey, I'd like to offer you X for your.
Correct.
Right.
Correct.
That's what I was saying.
Contingent upon due diligence, property taxes. So I have an out.
Right. Sure. Yeah, that's what I was saying when I was saying suggesting blind offers, because you're saying your response rate based upon your direct mail. Are bigger parcels worth more than smaller parcels?
Depends on where it's at. Not per acre, they're not. But in the aggregate, they're going to cost more.
Right. It could be. Fascinating. Mark, I've enjoyed this. This is certainly a niche asset class that a lot of people don't know that much about. Certainly, like you're saying, when you get into infill lots and stuff in bigger MSAs, maybe it becomes a more popular topic. But the further out you go, the less people know about it, and the less people are even paying attention to it. So,
Right.
Yeah, that's absolutely fantastic. Final 4 questions for you are this. If I gave you $20,000 to invest in real estate and you had no previous real estate investing experience, what would you do with it and why?
Well, I'd buy raw land and I'd learn how to do it. That's easy. That's a softball.
That was a softball, but you're supposed to have no previous real estate investing experience.
If I had no previous real estate experience and I had $20,000, I'd probably have heard me on a podcast and I'd go and learn how to do this model. Because I guess 20,000 is not going to get me very far in any other niche.
No. And it sounds like in what you're doing, it will get you pretty far starting out.
Yeah. I start with $3,000. I got a buddy start with $800.
Wow. That's crazy.
Yeah.
That's crazy. That's not a third of my marketing budget just for the podcast for this month. So that's That's wild, man. All right, great. Question number 2 is this. If you could help our listeners avoid just one mistake in real estate, and if we can keep it land related, what would that mistake be and how would you avoid it?
Don't overpay. Know your numbers. Check the comparable sales.
Right. Yeah, love that. Question number 3 is this. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
Well, I think that when I sell a piece of raw land, and we're taking it from somebody who's not paying their property taxes, those property taxes now go to that county when we get a new buyer. And I think the world becomes a better place when we can offer better roads, hospitals, schools, services to these counties.
Right. Right. That's great. I love
And then we
that.
also get a person who owns an asset that lasts forever. And it's
Right.
generational wealth for them.
Right. Yeah, absolutely. That's awesome. If our listeners want to get in touch with you, Mark, what is the best way to do that?
I'd say the landgeek.com is a great place to start. If they want to start learning how to do it, because I think the best way to learn is to do. I got a course that they can start with that's free, the landgeek.com/quick deals. And it's called a wholesaling model, how to double your money 30 days or less.
Awesome. Mark, thank you for your time today. This was fascinating. I do appreciate it.
Thanks, Sam.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.